There's a ton happening right now and you'll want to stay ahead of the game. I've got some fresh technical analysis coming your way before we wrap up this video, and trust me, you'll want to stick around. One of the key things we'll dive into today is the possibility of XRP climbing from where it currently stands to a potential $4 mark, a jump I genuinely believe is achievable. So let's not waste any time and get straight into it. Just a quick heads up, this isn't financial advice, always do your own research. Now let's talk timing. Weekends, especially Saturdays and Sundays, are usually pretty calm in the market, unless of course there's a major black swan event. And yes, we've seen a few of those pop up over the past 5 months, but for now things are relatively quiet, which honestly gives us a breather to regroup. That said, don't let the calm fool you. This upcoming week is stacked with major economic catalysts that could shake up the markets. Here's what's on the radar. We've got consumer confidence numbers, the release of the Fed minutes, April's PCE inflation data, and fresh consumer sentiment data coming out on Friday. Oh, and let's not forget the US Q1 GDP figures. These reports could be game changers. Historically speaking, when we see a strong GDP, low inflation, and upbeat consumer confidence, markets tend to rally quickly. Of course, no outcome is ever guaranteed, but looking at past patterns gives us useful context to help set expectations. Beyond the economic calendar, there are other major storylines to watch. Political developments involving Trump, trade tensions flaring back up, and big announcements tied to digital assets. All of these could have ripple effects on the market. One name that keeps popping up is Scott Bessent, whose recent statements around crypto are gaining serious attention. So as you can see, there's a lot to unpack, and stay tuned for, both in the charts and in the headlines. Before we dive into the main topic, there's something major we need to address: the growing financial strain being felt by many global economies. But of all the countries feeling the pressure, Japan stands out the most right now. Its economy is facing a serious crisis. In just 45 days, the yield on Japan's 30-year government bonds surged by an astonishing 100 basis points, reaching a record high of 3.2%. To make matters worse, over $500 billion worth of long-term, supposedly safe 40-year Japanese government bonds have dropped 20% in value in just 6 weeks. That's an eye-opening shift. For many in Japan, this is nothing short of a shock. The government had long encouraged its citizens to invest in bonds, assuring them it was a secure path to retirement. People trusted that message and poured their savings into these government-issued securities, only to now watch them plummet in value. For everyday investors who thought they were making safe choices, this situation feels like the rug has been pulled out from under them. Naturally, when traditional systems start to fail, people begin looking elsewhere to protect their wealth. That's the whole idea behind investing in bonds: stability and long-term security. But with that foundation crumbling, Japanese citizens are likely going to start exploring alternatives. This could spark a larger shift in mindset across the country. Many might begin to question whether the government can truly manage the nation's debt and financial systems. Some older investors may fall back on gold, a classic hedge in times of uncertainty, while others, especially younger generations, could turn to cryptocurrency as a decentralized, borderless option that doesn't rely on state management. So far, we don't have clear data on how the public is reacting, but it's safe to assume that action will be taken. It would be unwise not to. The financial system in Japan is starting to show cracks, and if it continues on this trajectory, things could spiral further. The situation has even been compared to a Ponzi scheme, with the economy heavily dependent on bondholder confidence. If enough people begin to panic and start selling off those bonds, the entire structure could come crashing down. Japan's reliance on these investments to keep the economy afloat means that a large-scale loss of trust could trigger a much deeper crisis. That's no way to run a stable economy, especially when times get tough, like they are right now. Japan's current situation is a perfect example of how vulnerable a nation becomes when its financial foundation starts to crumble. Personally, I believe the solution lies in looking beyond traditional fiat systems. To me, crypto presents that alternative, and more specifically, I think XRP has the potential to lead the charge. That's just my take, of course. But while Japan, China, and parts of Europe are battling severe financial pressures, something interesting is happening elsewhere. We're actually seeing a noticeable shift as investors begin redirecting their money into US credit markets. In fact, US credit funds are seeing a real rebound. Investment-grade and high-yield corporate bond funds in the US recorded $9 billion in net inflows recently. That's a huge turnaround considering that, back in early April, we saw a massive $28 billion in outflows, the biggest drop since 2020. The 4-week average of inflows has finally turned positive again, marking a major shift in investor sentiment. At the same time, the high-yield corporate bond ETF has surged by 5.4% since hitting a low on April 8, even reaching a new all-time high. Meanwhile, spreads on US high-yield corporate bonds have tightened significantly, dropping 1.37 percentage points to just 3.20%, one of the lowest levels since late March. In other words, while bond markets around the world are unraveling, the US bond market is finding its footing and gaining strength. It's no surprise really. The United States benefits from being the issuer of the world's reserve currency, giving it a level of leverage most other nations simply don't have. Maybe some countries overplayed their hand, while the US kept a strategic view of how things might unfold. That's why paying close attention to the financial moves the US is making right now is critical. When they commit to something, they've got the money and infrastructure to support it, which makes it worth watching. And here's something else that's turning heads. Just recently, Secretary Bazant made a statement that's blowing up in financial circles. He mentioned that stablecoins could generate a demand of up to $2 trillion for US treasuries and treasury bills in the near future. To put that into perspective, current demand hovers around $300 billion, so we're talking about a massive leap. This signals a major shift in how digital assets like stablecoins could reshape treasury markets. So whether you're listening to Eric Trump, Donald Trump, or Scott Passant, the message is becoming clearer by the day. Digital finance is no longer a fringe idea, it's quickly becoming central to the future of global economics. Everyone seems to be echoing the same sentiment right now. Stablecoins are the next big push, and tightening up regulations around digital assets could actually work in favor of US financial strength. The logic is simple. If the US embraces stablecoins and rolls out clear regulatory frameworks, it could lead to a surge in demand for treasury bills, and more broadly, the US dollar. That would reinforce the dollar's dominance in a new digital way, one that extends beyond the limits of traditional banking systems. It's a fresh, decentralized take on monetary power, and honestly, it's pretty exciting. Now, when you zoom in on RLUSD, the stablecoin that's reportedly being backed closely by the US government, you start to see how this plays into the bigger crypto picture. This could end up being a major win for XRP too. Out of all the digital assets out there, XRP stands to benefit the most from this kind of policy shift. Aside from perhaps USDW, the stablecoin linked to World Liberty Financial and Eric Trump. Given that connection to the Trump family, it's possible USDW might get some favorable treatment down the line, but that remains to be seen. Regardless, RLUSD is shaping up to be a big player, and its ties to XRP can't be ignored.